What's up, investors? It's Trend Trader here. Today I just want to share with you a company that I saw I saw somebody spoke about it on Twitter, so I went on to look for it. Basically, this company is offering monthly dividends. It's listed in the US. I think it's listed in the New York Security Exchange. So if you have an Easy Equities account where you are able to trade the US stocks, this is the company to look for. So I'm just going to share the screen so that I show you what exactly that I'm talking about this company. But personally, I like it. I'll be adding this company into my portfolio. But as always remember that nothing that we share on this channel is a financial advice. Everything that is shared here is just for information purposes. It is still your responsibility to ensure that you do your own research, you find your own information, so that whatever decision that you take at the end of the day, that decision is in your best interest. So yeah, here is this company. The name of the company is Realty Income. As you can see there, it says that this company pays a monthly dividend. So basically, this is a property investing company. It operates in the US, United States of America, but it also have some companies outside the US. Some of the companies are in Europe. So let's just check a bit of information about the stock information. As we said, that the name of the company is Realty Income, and then the stock code is O. So if you go to the chart on TradingView, if you just type in O, yeah, you see it pops there. So the stock is listed in the New York Security Exchange. So, and the ticker code is just O. So let's go back there. The stock is currently trading at $68.68, and yeah, the 52-week high, it traded as high as 71 rand. Why am I thinking rands? 71 US dollars. So at the current share price of $68, it's not far from the previous swing high, and the lowest that it has traded in the past 52 weeks is $48, as you can see, and yesterday's close was $69. So overall, what interests me about this stock is the dividend yield of 4.1%. So that's a good dividend yield. It depends where you are. We are in South Africa. Our inflation, it's somewhere around 3% or just below 3%, because the repo rate is around 3%. So this gives you value for money. Rather than saving your money in a savings deposit, I would be putting my money into this stock, so that I'll be earning, number one, I'll be earning monthly dividends. Number two, the dividend yield is greater than the inflation rate and the repo rate that is here. So this company has a market capitalization of 25 billion. Those are in US dollars. So for today, we're not going to focus a lot on the chart. What I want us to focus on is that this company actually, it pays a monthly dividend. So if you want to be paid each and every month, this is the company to look to invest your capital onto, so that you get money. So if you go to the About Us tab, you see that this company has made a monthly dividend commitment. As you can see, the founders of this company, they just wanted to use the rent that is collected from this property, and then the money will be passed on to the investors. As you can see that the properties are held under long-term lease agreements, so that they are able to support monthly dividends to shareholders. So today they continue to maintain that commitment. You can see that the company has paid 609 times consecutive dividends since the founding of the company in 1969. I wasn't even born at that time. Even my mother wasn't born then. And then they have maintained 110 dividend increases and 94 consecutive quarterly decreases. I mean increases, not decreases. So since inception, the dividend has grown by over 200%. And then as you can see that so far at the current trading price and the dividend that they are paying, the dividend yield, it's growing at an average of 4.4%. And then well, the US, the way they write date is a bit confusing. I'm just going to assume that it's May 3rd, otherwise it's the 5th of March 2021. So the dividend that they recorded for that month was 23 cent, so it's US cent and not South African cent. And then the dividend yield for the whole year, from let's just say it's the 5th of March. From the 5th of March 2020 to the 5th of March 2021, they've paid a dividend of 2.82 cent, or $2.82. Remember, what they paid per month is about 20 cent. So if you add all those 12 months, and then you find that they paid about $2.82. And then again, in terms of dividend, the dividend has been increasing for quite some time. 110 dividend increase since 1994, when they listed in the New York Security Exchange. As you can see, that they've maintained 94 consecutive quarterly increases. Remember that companies in the US, they report their earnings quarterly, so I think that is why the number of increases is less than the number of dividends that they've paid. And then dividend that they've paid over that 52-year period, it's over 7.8 billion. And then if you look at this graph, you can see since 94, when they listed in the Security Exchange, the dividend yield has been increasing from 90 cent all the way to about $2.82. So in 2020, they paid about $2.81. So in terms of comparison with the other investment that are available to investors, the 10-year treasury bond, so that's just a bond in the US. We know that the interest rate in the US were very low, so it's the same thing with the yield. It's about 1.74%. And the S&P 500, well, I don't believe that S&P 500 has been 1.4, but they are just talking about dividend, not the growth. And then the dividend yield of the Dow Jones Industrial Average, it's 1.9%. And the Real Estate Investment Trust Index, it's about 3.3%. So what they want to show you here is that they beat all these other investments. So if you want to get the bang for your buck, you are better off investing in this company. And then they give you a reason why you get dividend from them. Well, if you're invested in a company, you are a shareholder. If the company do well, shareholders are rewarded. If the company doesn't do well, then you are screwed. So you see that Realty Income pays this cash dividend monthly instead of quarterly. So because they are in a long-term lease commitment, it's easy for them to estimate how much money they will generate, which makes it possible for them to pass the income into their shareholders. And then they've been having this kind of growth from 1994. It's been growing by an average of 4.4%. So I think it's clear now that this is a good company. There is not a lot that I'm going to touch. You know that I'm not a fundamental person, but this company has different, as you can see, their top 20 clients. Okay, there's just a different spread, different companies. Some of these companies are blue chip companies in the US, like FedEx. It's a blue chip company. Walmart, it's another blue chip company. CVS Pharmacy, it's another big company. And then if you look at the industry diversification, you will see that they have different space, different tenants. They've got aerospace, automotive parts, they've got beverages, consumer electronics, diversified industrials, drugstores like CVS, education, electrical utilities, government services, grocery stores. You know, the groceries have been performing well. We saw in South Africa some grocery shops, or supermarkets as we call them, they've done very well, especially ShopRite. We know that Clicks did well. Discam also sort of, it performed well. Last week we saw that Pepco, it grew its revenue due to people staying at home, working at home. Like now, if you want to buy an expensive chair like this, you're going to spend a lot of money. So Pepco and JD Electronics, they managed to generate a lot of revenue because people are now working from home. So you see, they've got machinery, motor vehicles, dealership, it's just it's different industries that are leasing their space in terms of portfolio occupants, because if you investing in a company that has rental space, you want to see how much of the space is being rented out to tenants, and just to determine how much money that they're getting in. You see majority of these office spaces or these properties, they have over 97% occupants, meaning that the vacancy rate there is just below 3%. So most of these properties are occupied, meaning that money is coming in every month. And then you see in terms of properties that they've grew from 634 million all the way to about 6.6 billion. And then in terms of vacant properties, yeah, for quite some time they had flat years or just below 10. So we know that a lot of things happened during 2020 coming all the way to 2021. You see there was that increase in terms of properties that were not occupied. But we know most people are working from home, few companies are renting space. So this is expected to happen. Okay, we've already covered their top 20 clients. So yeah, in terms of the chart, like I said, for this company I don't want to focus a lot on the chart, because this is more of an income investment rather than a growth investment. Obviously I would like to see the share price appreciate so that I can also gain some capital growth, but my focal point with this investment is purely to receive income on a monthly basis. So that is why I'm not really paying much attention on the chart or saying anything much about the chart. But as you can see, it's been moving sideways. Like a lot of dividend paying companies, they have this tendency of moving sideways instead of going up. But if we zoom out a bit, looking on a weekly chart, let me just remove these moving averages. You can see that since 2012 coming all the way to 2021, there has been a steady increase in terms of share price. Yes, there were times like from 2016 coming down all the way to February or January 2018, there was a bit of a decline there. But from January 2018, the company grew up nicely, reaching a top there on the 24th of February before crashing. That's when a lot of countries caught coronavirus. So now it's back again. It just crashed for those couple of weeks, found support like S&P 500. We know that a lot of US companies last year, they grew up very nice. Even though they started by crashing, they just quickly recovered. So it's the same thing from 41 US dollars all the way to 68 US dollars. So I'll be buying this company, adding it into my portfolio. So you see, now it's important to engage people on social media. For example, if I wasn't following that person on Twitter, I would have missed out this stock. So now at least now I'm glad that I found this stock. I mean, yes, I'm a big fan of capital appreciation, but if there's a chance to make a monthly dividend, trust me, I'll be there, I'll be in. I'll want to own that stock. Yeah, so that's all that I wanted to share with you today. If you found value in this video, please just subscribe, and if you like this content, just click that like button so that the YouTube algorithm can make this video to be available to many people. And if you don't want to miss any of the future videos, don't forget to click that bell notification. So yeah, that's all for today.